The outlook of the property business is on the decline, and according to F&B Commercial Property Broker Survey, all three major commercial property sectors were on the downside in the fourth quarter of 2019. The office, industrial and retail sectors are not doing well in the perceived market activity levels. For more on this, we're joined by John Lewis, who is property sector strategist at F&B Commercial Property Finance. Thank you very much for coming.
It's a pleasure, Colin.
Right, looking at the way things have been happening, would one have a correct assertion to say that this downward trajectory is not having anybody to hammer the brakes on?
No, it's very much coming into line with economic fundamentals, which have been weak for quite some years. So if we look through the whole year at the survey, we've got 4 quarters worth of surveys now. Started last year actually not too bad. When we surveyed brokers asking them, are you satisfied with business conditions? Yes or no, very simple question. At the beginning of the year, 69% were satisfied. By the last quarter, it was 31%. So it's been on the slowdown, and when we ask them to give their perception of activity, market activity levels, which are strongly related to demand, we've also seen a couple of quarters of decline in all the major categories, with industrial still being the strongest but weakening, and on the weak side, office and retail neck and neck.
So when it comes to industrials, what's really causing the problem? Is it because of the decline in business activity in terms of manufacturing, but looking also at the slump in the numbers in as far as imports are concerned?
Yeah, industrials have just lagged with the downturn. They seem to have lagged retail and office space. Those office and retail have seemed to have the most troubles for quite some time, and industrial has been held up as one that was holding its ground. But more recently, I think if you look at, there's a few things. I mean, the economy does eventually filter through to inventory levels, and that's demand for warehousing. So we've seen the Reserve Bank's inventory to GDP ratio declining steadily for quite a few years now. So that dampens demand for warehouse space. And then on the manufacturing side, the real hardcore industrial space for manufacturing, we've seen manufacturing, our production slip into decline in recent times, manufacturing GDP in decline and contraction. So that does really no wonders for demand for industrial space either. So you can't get away from it. A good number of years of economic growth stagnation eventually feeds through to all the sectors, office, retail and industrial.
And then how do they speak to construction? Because that actually has not been doing well. The market has been very depressed with no contracts for construction approved in many spaces.
Yes, unfortunately, we have seen plans passed and completions in many areas of construction declining for quite some time. The one that's held up in terms of completions till recently has been the industrial property space. Quite strong building completion there, but I sense that we'll probably see that declining now as the demand or the demand growth at least for industrial space subsides too.
So what does this mean in as far as consumer, or rather shall I say business confidence index is concerned? Does it really feed to the negativity part of it?
Well, I think it's more, it's always difficult to know which way the causality is. I mean, the property sector and the lack of growth and demand for space would feed through into confidence levels in the construction sector, in the building construction sector, and in the property part of GDP, that property sector, the brokerage sector and so on. It is the weak economy is feeding through. But to a certain extent too, it's a victim of weak business confidence, because weak business confidence for quite some time has dampened growth in expansions by retailers, expansions by companies, and demand for growth for office space, retail space, etc. When confidence is low, that also constrains expansion plans and sometimes even leads to businesses actually cutting back and streamlining their operations, which is obviously negative for demand in property.
Yeah, so on the consumer side of things, we've actually heard a report that there are numbers that are going to come out this week, and we will hear why consumers are really staying away from credit, even though there is credit availability.
Yeah, look, we've seen disposable income growth declining for quite some time, and in recent quarters we've seen the situation where disposable income growth is actually lower than household credit growth. And that's an unhealthy situation, because it starts to lead to a gradual rise in the debt to disposable income ratio, and that makes households more vulnerable. So it's almost, although, you know, from a bank point of view, retail banks would love to lend to consumers, but from a consumer financial health point of view, and ultimately from a banking sector health point of view, it's important now that credit growth goes slowly until such time as economic growth and household income growth actually picks up and increases the capability of consumers to take on debt.
All right. So just your parting shot, what's the outlook like in the next coming 3 quarters? Is it doomsday?
Well, it's not doomsday. This has been a very slow stagnation. Obviously, one hopes that things don't speed up. You know, sometimes they do in these cycles. But our projection for this year is some global economic stabilization, which would push economic growth in this country slightly stronger, from 0.3 last year to 0.9% this year. That's not wonderful, but slightly better. Not enough, though, I don't think, to increase demand for property to a level where we slow the rising vacancy rates. So I foresee that this year we'll see a similar situation to recent years, where you have very low capital growth on property, below general inflation, and therefore you're having real value declines in property. I think that's set to be with us for some time.
All right. Thank you very much for your time.
It's a pleasure.
Right. John Lewis is property sector strategist at FNB Commercial Property Finance. Let's take a break.